Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, November 6, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Forget about the lines on the screen. We're going to talk about all that stuff. First, let's get the bigger picture. Let's go back to the melt up from last week. We had a bottom on the 27th of October, and we had 5 days each day last week in the upward direction. It was a melt up. It was a short squeeze. It was a rip your face off rally, the kind we talk about from bear phases of the market. Are we technically still in a bear phase? And we do have lower highs. We are below the 100 period moving average, but above all the rest on the daily chart. You look at the weekly chart, we're below only the 20 period moving average with a nice, healthy reversal week. Now, the volume wasn't tremendous on the reversal week. However, it was still a reversal week, and the price action is the absolute. Let's get a couple of questions answered right out of the chute. Can the market go up into the end of the year? Well, it's not going to happen every day, but the market can trend up into the end of the year, give or take. Sure, why not? We don't know that it will, but it can. We're at an important area. Let me explain. We talked about this last week. We're calling this a breakdown box. Why is that? Because the market ran up to this spot, was eating time off the clock, building energy to move higher, has some unfinished business up here, we'll get to that later, and collapsed back down. The market has come back to retest a former area where it broke down from. How often do you hear me say that? We talk about that at least in the live room each and every day. We talk about it in these videos each and every day, or if not, at least a few times a week. Last week, I gave you 435.85, if I'm not mistaken, as a stone cold short area. The market did hit that, spiked it by a couple of pennies, and did pull back. However, the market is above some important stuff. So we're in an area where she broke down from. They came back to retest it. Now the question is, does the market pull back from here or go sideways from here, build energy for another move higher? Let's start talking about some of these trend lines. We're going to start with the monthly chart. The pivot low from March 2020 all the way through this pivot low from October, the week of October 3rd, 2022, extending forward. That was never hit. We had our eye on that for the way down. That was coinciding with the 400, give or take, all that stuff. But that didn't happen. The market bounced ahead of it. Okay, fair enough. Then I took the same pivot low from the October 2022 lows. We draw a trend line up, and you can see here where that trend line, and we talked about this one before, was supportive of the market. They broke it. Now they've recaptured it back to the upside. That's a bullish move. So we don't need the monthly one anymore. If they come back down, we'll put it back up there. For now, we don't need it clogging up the chart. But wait, there's more. You can see on the daily chart, this was Thursday. The market ran right up to that place, stopped short, gapped over it on Friday. Now we're comfortably above it, having closed above it for 2 days. This trend line turns the market back to the bullish side, all other things being equal, which they're not. But it does turn the market in terms of this trend line back up to the bullish side. Okay, fair enough. What else we got? Well, how about this? This was the neckline from the original Head and Shoulders pattern. Now, this one isn't valid anymore, but look at this just by the way. As you can see, we still have the trend line there. The market is still respecting that trend line. It's not that we can do anything directly or indirectly with this information. It's just interesting how trend lines do matter. What else do we have? Well, we have a trend line above Now you can see we're starting to zero in on one or two of the what ifs. What if they're really bullish? What if they get above these pivot highs over here or this pivot high here? There's unfinished business. What happens if they keep going above the 100 period moving average? You're going to run into overhead resistance up in this neighborhood of this downsloping trend line. But David, do you have a number up there, a specific number? About 442 and a quarter. You see this trend line running across the screen. It does coincide depending on when it hits, if it hits. 442 and a quarter is an important number. Write that one down, put it on a sticky note. Not to say they have to stop there, but depending on how they got there, that would also be a target. Interesting little pattern developing here with these lines. You see how they crisscross. I could see somewhere along the line in the future, these trend lines sure playing another role. I would snap a picture of this chart. Narrowing things down a little bit, here's a 2-hour chart. What are they doing? They're eating time off the clock, hitting this trend line, building energy for the next move higher. What takes the next move higher off the table? Well, first order of business is getting below the low from last Friday. That opens the door down to a gap and a whole different kind of tape. That would be the pullback situation. For now, they're eating time off the clock, which tells us unless we see a turnaround Tuesday, there's another push higher. The destination on this run is probably higher. That's what Mrs. Market is telling us now. We take it at face value. You wake up Tuesday to a pullback, turnaround Tuesday's on the table. The market also had a rather narrow range today. There wasn't a lot going on specifically in the morning session. However, you'll see in a few moments, the numbers still worked. Were we able to provide trading opportunities for traders? While the trading was few and far between today, we still left all the inside number members and the live room members with the buy area if reached. And guess what happened? You can guess. By the way, a little intermission today. Come check out the social media handles. We've got a TikTok account going. We've got a YouTube account, which you know about, but we're starting to put out some shorts. These are mainly the trades that happen from inside the live room. And we've got a Twitter account. So go over there, check out the social media properties. If you're in there, if you're a social media person, don't be afraid to participate. We're just trying to expand the horizons a little bit. What's going on inside the numbers? We're going to run through the commentary. I'm going to point out a few important things. You can read the notes, go back to the chart, and double check the work. Basically, what we have to know is we had 435.50 as our early pivot. Below, there's some lower stuff, and we cite those, and you'll see those as we scroll up the notes. And above, there's some other resistance areas where if reached could provide a shorting opportunity. But you see here, we're looking for a spike below 434 for support. This is at 0 dark 30. And as you scroll up, what you'll see here is some other numbers come out of the woodwork. Call it 433.85, give or take. And what I told the live room members this morning is, hey, if they get to 433.77, it's the same as 85. If they get to 90, it's the same as 68 and all that stuff. So they did go a little bit lower, not much, by pennies of 433.85, but that was an area for a bounce back in the other direction. That's what support signifies. This was all put on the board before the opening bell. Right of the vertical is today's activity. We think better in pictures. That's why I brought it up. You can see the horizontal trend line in blue, 433.85, and you can see what they did with it. They hit it, they bounced, they tested it again, and they went up into the end of the day to where? Back to the trend line. Where was the pivot? 435.50. They're hanging around the pivot. They start pushing away from the pivot. They come down to the number. They bounce around and go right back to the pivot by the end of the day into the closing bell. It pays to know your numbers. It's all in here. pause the video, read the notes, go back to the chart to double check the work. Narrow range, quiet day, light volume, low participation, all that stuff existed, but when that happens, we can look forward to a pickup in volatility going forward. About stocks on the move, quiet Monday morning, but we did have a couple of stocks on the move. HGV, SPHR, both hit their entry objectives, so guess what? You got it. Let's go take a look at the charts. First, we'll take a look at Hilton Grand Vacations. Getting a buzz cut at the open. They gave you the deal. This was way more than the required minimum basic. Came into the number, popped about 2%, and then did what? Came down to the second number, and then went basically up into the afternoon session. So both numbers worked. The numbers work. We had some participation in the live room in HGV. About Sphere Entertainment, whoever they are. Same routine, came into the first number, gave you the deal, came into the second number, gave you the deal. Any way you look at it, the numbers worked. Apples. What's going on over in Camp IWM? Little bit of relative weakness today against the S&P. Down 1.25%, the S&P was basically flat. Up 0.25%, the big picture, it's flat. They got to a place outlined last week. They completed their head and shoulders pattern. They spent a few days down here, took off to the upside with everything else. Even though you have a reversal week, slightly bigger volume, that's a positive. Price action, that's a positive. Price is the absolute. You still have a bounce and a downtrend any way you want to look at it. Doesn't mean that price won't go higher. Doesn't mean it won't go a lot higher. For now, it's a bounce and a downtrend until proven otherwise. What really proves it otherwise? You got to get above 185, maybe even 186. Defense came out at the completion of the head and shoulders formation, came out at these pivot lows, goal line defense. They did a pretty good job. If they continue lower, you have a gap down here that should be garden variety of support. From an intraday perspective, they could spike it a little bit. We'll have numbers for the live room members in real time on Tuesday if needed. But as long as they got below Friday's low, then the door is open for this gap down here. We take it one step at a time, one candlestick at a time. Jack be nimble, Jack be quick. Everything had a big time rally last week. The transports certainly were rescued along with everything else. They have an interesting candle today. They started to run down to fill the gap down here, and they ended up reversing, finishing near, not at, but near the higher portion of the candle for the day. That's a bullish signal. Look for the transports to go more sideways than anything else over the next few days. Let them build some energy. Let them tell us what the next move is. Don't lose sight of the fact that we still have lower highs until we don't. From a weekly chart perspective, it's a bona fide reversal. How so? Well, here you have the prior week breakdown candle. They made a low, they hit the 200 period moving average, started bouncing off it last week, but guess what? They closed above the breakdown candle high. That's a positive. Doesn't mean price can't consolidate for a while, pull back a little bit, but on its face, that's a positive. That's a bullish for the tape. The high the prior week was 14,482 and change. Closing price last week, 14,512 and change. Closed above the high. That's a bullish thing. Thing is a technical term. What about the Q people? I think I gave you this number last week, 369.90. Little bit of unfinished business, however. Bullish move like everything else. We're not taking it away from the market. Fantastic rip your face off rally short squeeze operation last week. However, on its face, still have lower highs. What do I mean by that? Well, you have a high, you have a lower high, you have another lower high or a series of lower highs, wrong tool, couple of more lower highs, you have another lower high, and you may break the chain, but right now, as it stands, we have a lower high, but we don't really have a high in yet. We just have the current price at a lower high. We have to be the umpire calling balls and strikes. You take the market at face value. Tremendous week, rip your face off rally above all the moving averages on the daily chart. That's bullish. Still have lower highs. That's bearish. One of those two things is going to mean more than it does today into the near term. We're just citing what we have on the board. You have to look at both sides of the tape to get your assessment. You have to be the umpire, call some balls and strikes. Leave your biases at the door. Financials, tremendous week last week, right into the last line of defense in terms of the bear case from a moving average perspective. Couldn't get above on a sustained basis, but that's not a bearish thing. They just got there. They may have to eat some time off the clock for a while to get to the next place. That's it. Weekly chart, lower highs, but that could change. What if they recapture the 100 period moving average? They'll be above all the moving averages. Guess what? That would be bullish regardless. We take the market at face value at present. Whether or not they come back down in December, even in November, January, February, all those things are possible. Some of them are even probable. Right now, take the market at face value. About Smashmouth, what's that lineup at 150, 180? That's a target. They should get there sooner than later. Doesn't mean it has to be tomorrow, but they should get there sooner than later. So you look what happened. They were collapsing. They were eating time off the clock, riding the 200 period moving average. One of two things was going to happen. They were either going to get into this space where they tested it. You see this low here? We talked about it at the time. 136.28 that got down there. Instead of cracking the code down to the next place where there were all this white space all the way down to like 130, 129, instead of doing that, what did they do? They flipped the switch, had a rip your face off rally, issued a conveyor belt of pies in the face across the board last week. It's a shakeout of the shorts. 150, 180 is your next target in Smashmouth. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.